Welcome back. This is Elliot from the Early Stage Investor. Our entire mission on this channel is to make life-changing returns. We usually talk about small market cap assets. Today we're going to talk about Tesla, which has a market cap of $1.4 trillion. So can it 10x from here? Can it become a $10 trillion company? A lot of companies will be worth $10 trillion in the future. Part of that has to do with just the money supply debasing. Warren Buffett said that if See's Candy was valued $10,000 higher than what he wanted to pay for it, he wouldn't have bought it. Well, now it's worth hundreds of millions of dollars. That's a lot of that's currency debasement. Companies used to be worth tens of thousands of dollars, if not hundreds of thousands of dollars. Now it's a rounding error. Now it means nothing when looking at a company, $10,000. So you have to factor in currency debasement. And that alone, this could 10x. But we want to look at fundamentals, right? Because some assets won't do anything even with currency debasement. That would be horrendous. So let's dive into Tesla. They just had their Q3 2025 earnings report. Let's start with what Steve Eisman of The Big Short said about their earnings. He obviously became famous for shorting the housing bubble, so he's used to finding scams. Let's see what he said about Tesla's earnings.
GM's 2025 PE is 6 times, and Tesla's 2025 PE is 255 times. Conclusion? Tesla's PE has absolutely nothing to do with its current auto manufacturing business, but with all the stuff, AI and robotaxis, that the market hopes Tesla will produce. And speaking of Tesla, Tesla reported this week. There were some positives, but I'd have to say, really not many. On the positive front, revenue rose 6% for the quarter, as opposed to falling 16% as it did in the second quarter. But the reason for the increase in revenue was the boost of Americans rushing to buy electric vehicles before the $7,500 federal tax credit expired on September 30th. And on the call, Musk admitted as such, and he gave zero guidance for auto sales in the December quarter. How could he? Now, of course, the Tesla bulls don't care because they no longer care about the straight auto business. Musk is focused on 2 major bets: robotaxis and the Optimus humanoid robot. All this is in the future. The bulls will continue to believe, and the bears will continue to scratch their heads.
So on the surface, it looks like a struggling manufacturing company. They're not meeting their deadlines. They're lowering their revenue guidance. They're not providing guidance. They're having issues. But what he's saying is bulls don't care. And what the market thinks when they hear that is that it's just a bunch of small retail traders. It's not a bunch of small retail traders. We're talking about tens, if not hundreds of billions of dollars moving into this asset. These are institutions, really smart institutions in theory, that don't care. And the reason for that is because everyone knows that if you want to make life-changing returns, you have to own the future. Where's all the capital going to be flowing? And Tesla, their mission is to own robotics. We know how big robots could be in the future. Well, that's really important. How big can they get? That's going to tell you how big Tesla could get. And the fact that they have production delays by a quarter or two really doesn't matter in the grand scheme of things. So let's dive into the fundamentals of Tesla, the actual numbers. Let's look at their balance sheet first. Total assets, $133 billion. Total liabilities, $53 billion. So right there, they have $80 billion of capital to play with over the long term, to invest in robotics, in self-driving vehicles, in power storage, right? Really important, potentially huge cash flowing industries if they can nail it, right? They can almost be a monopoly in robotics, almost a monopoly in self-driving vehicles, and they have $80 billion to play with. They obviously have a lot of equity and a lot of ways to fundraise as well. That's why people are so bullish on this company. It's not about what they're doing now. It's about the amount of capital they could invest in super futuristic, important, crazy, disruptive, innovative industries. And they also have one of the most visionary people on the planet, Elon Musk, doing it, right? Betting against Elon Musk has not worked. So very, very healthy balance sheet. Even in the short term, over the next year, current assets, $64 billion, current liabilities, $31 billion. So in the next year, they can easily, without even trying, invest $30 billion in whatever they want. And they're investing in really important growth industries. What about their income statement? This is what people are complaining about. 3 months ended September 30. They gross profit of $5 billion versus a year ago, this quarter, Q3, of around $5 billion. So they haven't really gone anywhere. This is what the bulls are looking at. They're like, why haven't they done anything? It's because they're not trying to be just a car company. They're trying to invest in way more futuristic industries. 9 months ended September 30. This is where it gets a little more interesting. Year to date gross profit, $12 billion. That went down compared to the previous 9 months of last year. Last year was $13.27 billion. Now it's $12 billion. So they're kind of like not growing. They're not doing anything. But they are investing in the future. And so that's kind of where we're at. Very healthy balance sheet, almost infinite amount of capital to invest in whatever they want. So let's look a little deeper into what this company is about. Tesla reported Q3 2025 results on October 22, 2025, showing record vehicle industries and record energy storage deployments. That's really interesting. No one thinks about record energy storage deployments, but they are doing record vehicle deliveries, driving total revenue of $28 billion and record free cash flow of $33.9 billion. Operational highlights: 497,000 deliveries, up 7% year over year. Storage deployed 12.5 gigawatt hours, up 81% year over year. Cash and cash investments, $42 billion. The company cited higher operating expenses, stock-based comp, lower regulatory / FSD revenue as headwinds, while noting AI, robotaxi, cybercab, semi, and Megapack 3 production plans for 2026. They're just delaying. And that's what Elon Musk generally does. He comes up with an idea and it takes longer than people expect, but he tends to deliver on it. The company is expanding its robotaxi operations, now operating in Austin and most Bay Area cities, with plans to expand to 8 to 10 metro areas by the end of the year. That's upcoming, right? That's pretty huge. Tesla is making significant advancements in AI with the introduction of version 14 of its self-driving software, which is available to all users in the US. The energy storage business is thriving with strong demand for Megapack Powerwall products and the introduction of new products like Megablock and Megapack 4. Tesla is on track to remove safety drivers from its robotaxi fleet in Austin by the end of the year, indicating progress in achieving unsupervised full self-driving capabilities. So those are the positives of the business. Growth in their innovation and potential dominance in robotics. Couple robotics with smart, intelligent AI, and you can accomplish a lot, right? How much are these other companies going to be paying Tesla for their robotic technology? Elon Musk understands this is the future. All the negatives, again, are production delays, tariffs, whatever. It doesn't really matter. They have enough money to work through all of the negatives at this point. And so the real question is how big the markets are that Tesla is in and what they're trying to dominate in the future. Humanoid robots. The immediate market for Optimus in 2025 is small, $20 to $50 million, but long-term potential is immense, 10 trillion plus for Tesla alone. By 2027, up to 500,000 to 1 million units annually. Long-term 1 million plus units per year by 2029 and 2030, scaling to 100 million cumulative by 2035. These are humanoid robots. 100 million humanoid robots by 2035. So the numbers just get crazy. It's really hard to know at this point, but there will be demand for smart, intelligent humanoid robots. If Tesla captures it, guess what? They're going to continue to be ridiculously expensive, just like they've been for their entire history, right? The entire time Tesla's chart has been moving up like this, its PE has been ridiculous. People have been looking at it, but if Elon Musk can deliver, there's always going to be a premium on Tesla, and there's always going to be a premium on the highest quality assets on the planet. That's why expensive real estate stays expensive for a long time, and low quality real estate stays in bargain territory for a long time. Same thing with stocks. High quality assets can stay expensive. So as long as they continue growing and dominating and winning, they're going to continue skyrocketing. So can this 10x? Absolutely. And we haven't even talked about full self-driving. How big is it going to get? The global automated vehicle market is projected at $122 billion in 2025, growing to $214 to $445 billion by 2030. That's massive. With Tesla holding between 20 and 60% share due to its data advantage. 3 billion plus fully self-driving miles driven. Robotaxis alone could add $100 billion plus to Tesla's valuation by unlocking high margin recurring revenue. The fact is, total unknowns, but they are disruptive. We've seen what can happen with disruptive technologies. Monopolies form. So they're going to have competition from Google and other companies, but we've seen Tesla be able to beat their competition with innovation. And so Elon Musk just has to deliver. But if he can deliver, and it's, again, likely that he will, that's why the stock is high. The market's betting that he will. Smart money is betting tens, if not hundreds of billions of dollars that he will succeed. Because there's no reason to think he won't. Then this can absolutely 10 X, right? It's like it wasn't clear if Amazon would own the e-commerce market, but they ended up crushing the e-commerce market. Microsoft, Apple, Google, these other companies have always been ridiculously expensive, and they've stayed ridiculously expensive, and they've skyrocketed. So when we look at currency debasement, and we look at growth, and we look at innovation, this thing will stay ridiculously expensive and is very likely to 10x. Very likely. Again, the value of the dollar is going down. So priced in dollars, Tesla's going to skyrocket. And if it can start to earn money off of these industries, it's going to skyrocket even further. So it can absolutely hit a $10 trillion market cap. It's undeniable at this point, and it most likely will. Will we have to deal with some chop in the short term with production delays and whatnot and tariffs? Sure. Doesn't really matter. Market doesn't care for good reason. They're pricing in massive growth ahead.